Good day traders, welcome to another episode of the RMDTRADER Weekly Market Fix. My name is John Jacobs, here to present you with all the best technical setups for the trading week ahead. For this week, we will briefly revisit our 5-day trend evaluation method to see how we used it to identify a lot of high probability setups over the past few months. If you haven't seen the original video, please follow the link provided in the description below. So to start this week's market fix, let's quickly have a look at some of the trades that we put out last week on our Twitter, Telegram, as well as on our email newsletters. So we have 3 trades that's currently active. The first is a long trade on the XRPUSD. We also have a short setup on the Australian dollar USD, and then we still have active short setup on the NZDUSD. So let's just quickly have a look at those. So first off, the NZD trade is still active, and we are still in the profit zone at this point. And also we are, for those traders who got a good entry, can actually put their stops to break even at this point. And then we still have 2 more targets remaining, and our final target is actually, I think I changed it a bit more conservative to 0.695. That's on our monthly S1 pivot, so we are expecting price to move towards this area. The stop remains at 0.723. The other trade that we have is that Australian dollar USD trade. It is also a short trade. It's also currently in profit. So for now, again, traders who have got a good entry in this blue zone can now move their stops to break even. But we are still expecting some downside towards our 2 targets at 0.736 and that full target at 0.728, which is also the monthly S1. Finally, the last trade that we had that's still active is the one on XRPUSD. This is also a long trade. We can see that we are still right in that entry zone. So for those traders who haven't had a chance, there is still an opportunity to get on board with this trade. We have 2 targets. The first one on that yearly R3 pivot at 1.29, and then a full target at the monthly R2 at 1.37. There is a lot of volatility in crypto at the moment, so be careful, and of course that's why we are using a stop loss with the stop currently placed at 1.06. So the next thing I'd like to show you guys, and then something I actually just quickly want to revisit, and that is our 5-phase trend evaluation method. The initial part 1 of this video we put out on the 9th of August, and then we had a follow-up video called part 2, and we briefly explained how we use this method to analyze the trend and the overall bias in the market to understand what direction we can expect the market to move and to get good risk to reward setups and probabilities. So I'm just bringing this to your attention once again, so that you are aware that we are using this method that we developed ourselves. And if you go to our second part of our video and you go and look at the timestamp 16 minutes, you'll see we had this EURUSD example where we actually projected what we would expect to happen if this method turns out to work the way we, of course, expect it to work. And if we just go to our EURUSD example and zoom out slightly, we can see this is exactly what happens. So I'll just briefly go back to the screenshot so you can see how we said we're expecting price to move back towards a previous market structure at 1.88. And of course, if we do look at what happened, that is exactly what played out. Market went back to this previous market structure. It continued lower, taking out previous swing lows and made a new low on that diagonal. And excuse me, if you look at our screenshot, you'll see that's exactly what we were expecting. They were not that second move up, but the second move up that we did get was towards that previous market structure area at 1.17 before moving lower once again, and that is what we saw, but we only saw that a bit later on the 29th of October, and we can see how we went back, tested that previous market structure, and we are currently expecting price to still make new lows as it continues with this bearish trend. So in line with this projection, let's have a look at what we can expect for the EURUSD. I'm just going to make our screen full screen. Sorry, no, I'm just going to use this full screen rather. So for the EURUSD, we can see that we have now rejected previous market structure and we are heading towards new lows. It's possible that we can still consolidate for a while in this area, but that means we have our resistance from that daily 50 SMA at the weekly R2 and monthly R1 at 1.166. And as soon as we break previous structure low at 1.151, which is also last week's low, we can expect another move lower towards that monthly S2 at 1.425. Looking at the GBPUSD, we see something very similar, and we've already had two setups that worked out really well, all in line with our 5-phase trend evaluation method. We are still in phase 3 of this method, and for those who haven't seen the document, we did compile a document and we did discuss it on those trend evaluation methods, just briefly outlining the different phases and what you can expect for each phase, how to identify, and of course, how to trade each of the different phases. So I'm not going to spend more time on this, so if you are interested, go and have a look at that videos. We will put a link in the description below. So for GBPUSD, we had a short setup that worked out perfectly. We had reached our full target. At this point, we are still expecting either a move slightly lower towards maybe the weekly S1 at 1.337. But at this point, the higher probability trade would be another short after we see a pullback. Now, the pullback can happen either to this area at the 1.360 or perhaps somewhere between the monthly pivot and that daily 50 SMA at 1.369. So when price makes its way back towards this area, we would once again be looking for price action and rejection from this area to trade another low. So once we have that set up, we of course will share that with you guys. Looking at the EURGBP also in line with the 5-phase trend evaluation method is currently in its exhaustion phase, so that is phase 5, and for this reason we actually had a long setup at the end of this trend, and as we've mentioned, we were looking for classical charting patterns, and at this point we were looking for a double bottom, which we did seem to have found, and we also hit our full target for that pullback. So at this point it would be very important to see what price makes of the daily 200 SMA, and of course if we can get above that daily 200 SMA, we will start with a new bullish market phase, phase 1. So for now this week, it's possible that we will likely just come back and make a brief test of this area close to our weekly pivot and our daily 100 and daily 50 SMAs at about 0.852, and from there I'm expecting a move higher, and we'll see if we can take out that daily 200 SMA to make a new swing high towards the previous swing highs at 0.862 and eventually maybe 0.869. We briefly mentioned the active setup on the AUDUSD. Now, this setup is still active, and in line with the 5-phase trend evaluation method, we are expecting a move lower, and you can see that we have some targets on the screen. So first target would be where we have our daily 100 and daily 50 SMAs converging at about 0.736. That's also the low from last week, and we have our short target for this week at 0.728, which is the monthly S1. So let's see how that plays out, and I'll also keep you guys updated on its progress. Looking at that NZDUSD trade, once again, as I've mentioned, we are still active in this trade and we are expecting moves lower. We have a stop in place in case this does turn out to be a breakout. So we can see, looking at the bigger chart, there was a diagonal trend line which did break, and then we had this mini double top formation, and it's possible that this is just a retest of that breakout, and we can see if we do find support on this daily 200 SMA, the higher probability likelihood for this setup would rather be a move to the upside towards the stop loss. So for those guys who are more conservative, I would actually recommend rather not staying in this short. As I say, I only see this as a short opportunity really if we get below, say, the monthly pivot at 0.708. So what I actually want to do is I want to change the dynamics of the setup slightly. So I'd say if we can get below this blue zone and below the daily 200 SMA, there's a very high likelihood for a move to the downside. But if we do find support from the daily 200 SMA, I think we'll rather see a move towards that area at 0.723. So do keep that in mind with that trade. And looking at the USDCHF, this one is pretty similar. We had what was like a mini head and shoulder stop, which did appear to play out towards this target area at 0.908. I'm not liking the rejection on that daily 200 SMA at this moment, because that could indicate that we are expecting even more downside, which would send it below that stop loss area at 0.908 and lower at least towards the monthly S1 at 0.905. If, however, we do get above the monthly pivot at 0.919, I'm pretty sure we will start seeing moves higher towards 0.926 and eventually 0.9363, which is very close to our previous swing highs. Now, looking at the USDJPY, still consolidating. It's starting to look a little bit like a flagpole formation. So that would be the flagpole, that would be the consolidation or the flag. And typically how these play out is you'll see a continuation to the upside or into the direction of the trend, which is up at this stage. So should we see a move above the weekly pivot, and especially back into that green zone above the weekly R1, I think we'll at least get a target of 115 at 0.48. That is our monthly R1, and even higher. I mean, it's very possible that we can see a move in the next week or two, rather, towards the monthly R2, which is sitting at, let me just quickly see where that is. So that is sitting at about 117. So that's also very possible if we can see price breaking higher. Moving on to our indices, looking at the NASDAQ. The NASDAQ is starting to look very stretched, and although the NASDAQ has this ability to continually grind higher, we are finding ourselves on multiple levels of resistance, both technically and looking at some other factors as well. But just looking at some possible scenarios, so it's possible that we see a rejection from where we are currently trading. This is the monthly R1. And this could see a move back at least to the weekly pivot at 16.2 and a correction deeper towards that daily 21 EMA at 15.7 with some strong support, I'd say, at our daily 100 SMA at 15.2. Just looking at some targets, should price manage to continue higher this week, we have our weekly R1 at 16,650, and then we have that monthly R2 combined with the weekly R2 and that secondary diagonal resistance at 16,877. So definitely an area to be careful at, and I'd rather not look at any long trades personally. But yeah, let's see what price action does once we get this week started. Looking at gold, for gold, I'm also expecting a new trend to have started. We have broken above the daily 200 SMA, so that would make us, this will see a new market phase 1 initiated. So for this reason, I think we can at least expect some higher targets this week, maybe the previous swing highs, which would be our initial resistance at 1,850, and the inverted head and shoulders target is sitting at that the monthly R2 pivot at 1,850. And of course, support would be at our weekly S1 at 1,777, and then we have our new weekly pivot at 1,797, or maybe we can just round that up to 1,800. So that could also be an area for a retest for maybe early in the week, just a retest of this area before we see price starting to head higher. Concluding by looking at cryptocurrencies, so as I've mentioned previously, we have this head and shoulder structure on Bitcoin, and even though price is still trading above, all the major moving averages, it's still above the 21 EMA, meaning the trend is still up. That means there is still a very high probability that we will see this head and shoulders invalidated. And for that to happen, we need a break above the weekly R1, that's 64,355. So if we see a break above that level, that will invalidate this head and shoulders, and we will most likely see a move higher. And first target would be 71,215, once we take out that head and shoulders. In terms of the head and shoulders actually playing out, the neckline is sitting at the weekly S1 at 59,400. That will see price head back towards the initial support at 57, and if that breaks, we have two more targets to a daily 100 SMA and at 50,400, and that yearly RT pivot where it converges with the daily 200 SMA at 46,170. Finally, looking at XRP, as we've mentioned, we do have an active trade on this setup. So should the cryptocurrencies continue to break out higher, we will see our targets realized. We have our stop loss at this area just below the daily 100 and daily 50 SMAs at 1.06. So if that area fails and we see a sell-off and correction in cryptocurrencies, it's very likely that we'll see XRP correct towards this area at 0.86, as that is where we have some previous horizontal support. And that concludes our market fix for this week. Before we say goodbye, let's have a look at this week's pro trading tip. Always tilt the probabilities into your favor by only taking high quality setups with positively skewed risk-to-reward ratios. And until next time, we wish you all the best of your trading. Remember, trade smart and trade successful.